welcome to the deep dive. Today, we're really getting into the weeds on auto insurance. Our goal, simple. Let's, demystify this thing that affects basically everyone and help you make your policy actually work for you. Think of it like a shortcut to really understanding it all. We've got some surprising stuff here, negotiating claims, hidden coverages, things like that.
And it's so important, isn't it? Auto insurance, well, it's more than just a bill. It's a contract. It's your financial safety net on the road. But honestly, so many people don't fully get how to maximize its value, or, just as crucial, how to dodge the common mistakes. So yeah, this deep dive should really arm you with the knowledge to handle it all confidently.
Right, because it's so easy to just, sign up, pick some numbers that look okay, and then just cross your fingers, hope for the best. But your material suggests there's more to it, like a real art to getting the most bang for your buck. And it seems to start with something basic, but maybe overlooked, knowing what your car is actually worth.
Yeah, exactly. And what's interesting is how this one story you found really shows the gap, right, between what an insurance company might suggest and what's actually good for you. Like that adjuster after a deer hit saying, oh, just liability for an older Toyota with 180,000 miles. An adjuster sees the miles, sure, but you need to see the value, a Toyota or a Ford. Those things can easily run for 300,000 miles. So why would you only put liability on a car that, okay, it's older, but it's reliable, still has value, especially those brands known for lasting? Knowing its real worth, maybe checking KBB or NADA guides, that gives you the power to push back a bit, make the policy truly benefit you.
That makes total sense. It's about the asset, isn't it? Not just the odometer reading. So besides mileage and make, what else should you maybe think about for that true worth before deciding on coverage?
Well, definitely the car's overall condition, any big repairs you've done recently. And sometimes certain models are just more in demand in your area. That can affect value too. And speaking of financial protection, deductibles. Your material had some really concrete numbers on that. Stuff that can really change your out-of-pocket costs.
Okay, yeah. Tell us about those numbers.
Right.
Because I think this is where a lot of us just guess and it could cost us later.
Absolutely. So like a $50 windshield deductible. The notes mention someone using that almost every year, no fault claim, easy. And then maybe a $250 collision deductible. Think about hitting a deer your source mentioned that costs them like $35 after deductible, or a tree limb falling. With those lower deductibles, yeah, your monthly premium might be a bit higher. But over time, it can save you a lot when something actually happens. Now, compare that to, say, a $1,500 or even a $2,500 deductible. You got to ask yourself, could you comfortably shell out that much cash suddenly without warning? For a lot of folks, that's tough. It creates real stress. It's really about matching your deductible to what you can actually afford to pay out right then in an emergency.
That's a huge point, having the cash ready. So, okay, for someone maybe on a tighter budget, is there like a rule of thumb for balancing premium versus deductible? Or is it just totally personal?
It's mostly personal comfort, really. But a decent rule of thumb, set your deductible at an amount you could pull from an emergency fund without, wiping it out or touching your main savings. Now, moving on to liability coverage. Your material had some really powerful stuff there too about protecting yourself if you cause an accident. Like the difference between having, say, $25,000 in property damage coverage versus $50,000. That higher limit basically shifts the responsibility for those big repair bills, maybe totaling someone else's brand new car from you to the insurance company. And your notes highlighted this, right? Those higher liability policies. Insurance companies maybe don't love selling them, but guess what? They benefit you, the insured, the most.
Okay, so higher liability shifts the risk. Got it. Now, let's clarify something people often mix up. Comprehensive versus collision. They sound similar?
Yeah, they do, but they cover different things. So collision coverage, that pays for damage to your car when you hit something. Another car, a pole, a garbage can. Basically, an impact caused by you driving. Comprehensive coverage, though, that's for damage from stuff that's not a collision. Think theft, vandalism, fire, floods, hail, or like we mentioned, a deer running into your car, or a tree branch falling on it while it's parked. Things mostly outside your direct control. And just like with collision, picking the right deductible for comprehensive is key. Remember that $50 windshield example? That falls under comprehensive.
Okay, that clears it up. Comprehensive is kind of like the acts of nature or other random stuff coverage.
Right, and your material also had this incredible insight about negotiating total loss claims. That sounds like something most people wouldn't even think is possible. It definitely raises the question, doesn't it? Like, how much power do you actually have in that situation? Your notes mentioned own or retain. That's where you can actually buy back your totaled car from the insurance company. Now, you can keep the car, but fair warning, it usually gets a salvage title. That makes getting full coverage insurance on it later much harder, sometimes impossible, and it kills the resale value. So it's a trade-off. But the negotiation tactic, that's interesting. Get your own repair estimate first. Like the example you found. Someone got an estimate for $3,600, but their friend fixed it for just $600. They pocketed the difference from the insurance payout. It comes back to knowing your car's real value and knowing your state's total loss threshold. That's the percentage of damage, often like 65% to 75% of the car's value, where they have to declare it totaled. Knowing that gives you leverage.
Wow. Okay. Owner retain and getting your own estimate. Good tools to have. Now, a really critical thing came up when looking at scenarios that often aren't covered by your standard policy. Let's get into those gaps.
Oh, this is huge. If you use your personal car to make money, like driving for Uber, Lyft, Uber Eats, DoorDash, even an old school taxi, you need a totally different kind of insurance, commercial insurance. Your personal policy almost always has an exclusion for that. If you have an accident while you're on the clock doing that stuff, they will not pay. Simple as that. Always check if the company you're driving for, like Uber, provides any coverage while you're logged in. Then you've got specialty vehicles, like classic cars, a 65 Mustang, a 69 Camaro. They need specialty classic car insurance. A regular policy might just write it off as totaled because of its age, even if it's pristine. And customizations, if you add stuff like, those fancy $800 rims or a killer sound system or other aftermarket parts, standard policies only cover factory parts. You need specialty coverage or an endorsement for those additions. Otherwise, if they get damaged, you're out of luck.
Those are some major exclusions, things a lot of people probably just assume are covered. What about those unexpected liability situations, like with teenage drivers, or maybe when fault isn't clear-cut?
Yeah, connecting this back, it's all about knowing the rules for household members and who's assigned to which car. For underage drivers, sometimes parents try get around. They might have an older car, maybe just liability coverage on it, and put the teen specifically on that car's policy. Or sometimes, if the teen doesn't live with you but drives your car with permission, maybe putting them on a grandparent's policy could be an option, depending on the insurer's rules. It really hinges on, do they live with you? Do they have regular access permission? Then there's shared liability, sometimes called split liability. This is tricky. It means both drivers can be found partly at fault, even if one technically had the right of way. Why? If you failed to take evasive action to avoid the crash, like say you're driving down the main road, clear right of way, but you see someone pulling out from a side street way too late. If you just keep going and hit them, even though they pulled out, a court could say, hey, you saw them, you could have braked or swerved, you share some fault. So basically, drive defensively, pay attention. Avoid obvious hazards too, like driving through flooded streets. You can be held liable if you choose to drive into a known danger zone and something happens.
Huh. That's fascinating. And potentially expensive. Really underlines that defensive driving thing. Okay, so given all these twists, an accident happens. What's the absolute priority right then and there? How do you protect yourself with evidence?
Evidence is everything. First off, police report. Even if they seem reluctant to come for a minor fender bender, insist if you can. You need that official record. And then immediately, like before cars get moved and possible, get your phone out. Video everything, the whole scene, the positions of the cars, take clear pictures, license plates, the other driver, if they're willing, their driver's license, their insurance card, get close-ups of the damage on both vehicles, dash cams, incredibly valuable. They just don't lie. And here's a tip. Try, if you can, to get the at-fault person to call their insurance company right there, on speakerphone maybe, with you present. Why? Because once they drive away. Well, if they're not honest, they might just disappear or change their story.
Get them to call on the spot. That's a smart tactic.
Then there's uninsured motorist coverage, UM. You gotta know it differs for damage to your car versus injuries. Some states, like the notes mention Alabama, might not even offer UM for vehicle damage. So if an uninsured driver hits you, you might be stuck fixing your own car through your collision coverage, or paying out of pocket if you only have liability. But those states often do have UM for injuries. If your state does have UM for property damage, the deductible is usually pretty low, maybe $200 or $250. Oh, and car seats. This is a big one people miss.
Right, you mentioned that earlier.
State law often requires insurance to pay for replacing car seats after any accident, even a minor one, because their structural integrity could be compromised. Keep the old seats for proof, take pictures, buy the new ones, get pics of those, and the receipt showing tax. Send it all in, they have to reimburse you. It's often overlooked, but it's mandated coverage.
That's super helpful, especially for parents. Okay, now, Tricky subject. Injury claims. Do you always need to lawyer up?
Right. Bodily injury claims, BI. That's generally where the big money comes from in a settlement paid by the at-fault driver's insurance. Limits often start around $25,000 or $50,000, but can be much higher. But here's the surprising part, honestly. A lot of the time, you don't actually need an attorney for a straightforward BI claim. Insurance companies, especially for common injuries, whiplash, neck and back stuff, maybe a simple broken bone, they often have internal amounts kind of set aside, or typical ranges they'll offer. Why? Because they want to settle it quickly and avoid the costs of litigation. Lawyers are expensive for them too. So my advice is, before you run out and hire an attorney, see what the insurance company offers you directly. Talk to the adjuster handling the injury part of the claim, because remember, that attorney, they're going to take a percentage, often a third, sometimes up to 40% or even half of your settlement. Think about it. If the policy limit is $50,000 and the insurer offers you, say, $40,000 directly, you get $40,000. If you hire a lawyer, maybe they get the full $50,000, but if they take 40%, you only end up with $30,000, less than the initial offer. So you really need to weigh your options. For many, many situations, you probably don't need an attorney.
That's really powerful, potentially money-saving advice. But okay, flip side. When should someone seriously consider getting legal help, even knowing the cost?
Good question. Definitely if the insurance company just flat out denies your injury claim, or if their offer is insultingly low compared to your documented medical bills and lost wages, and absolutely if your injuries are really severe, complex, or life-altering, needing long-term care, that's when the stakes are high, and an attorney's expertise in navigating that becomes crucial. It's basically when the negotiation seems totally stuck, or the situation is just too complex or high value for you to handle alone. And speaking of complexities after an accident, rental cars. Your material suggested there's more to that than just grabbing the keys.
Yeah, seems like it. Like a lot of people probably think I have full coverage, so rental's included, right?
Nope, not automatically. First big point. Having a full package or full coverage policy doesn't guarantee rental reimbursement. It's usually an optional add-on you have to specifically ask for and pay a little extra for each month. Then how they pay can differ. Sometimes it's direct payment. The insurance company sets up direct billing with the rental company. You just pay your deposit. Easy. Other times, especially if you're the claimant against the other driver's insurance, they might offer loss of use. That's basically a cash payout, often based on how long your car should take to repair. You can use that cash for anything, rental car, Ubers, bus fare, whatever. It gives you flexibility. But here's the really crucial tip. Inspect that rental car like crazy before you drive it off the lot. Use your phone again. Video the entire car inside and out. Point out every scratch, ding, stain, weird smell, dog hair, smoke, whatever. Get it documented. Make sure the little diagram they give you showing existing damage is accurate before you sign anything confirming the car's condition. Why? Because rental companies are notorious for finding new damage when you return it. And if you didn't document it beforehand, they can, and often will, just charge your credit card or even pull your insurance deductible directly from your bank if you used a debit card for the deposit, and when you return it. Get someone to sign off that it's okay. Avoid those after-hours key drops if you can. You don't want to be blamed for damage someone else does after you leave.
Wow, those rental tips are gold. So practical for avoiding nasty surprises. Okay, stepping back a bit, thinking about managing claims overall, not just rentals, what other sort of tactics or rights did your material highlight?
Yeah, a couple of important things. Remember, you often have more time than you think to deal with a claim. Depending on your state, you usually have 2, sometimes even 3 years to refile a claim or submit supplemental damages, or just get a second estimate if you're not happy with the first one. This applies to both auto and home insurance claims, and the key is the repair work has to be done to your satisfaction. That great home insurance example, right? The roof claim. Initial check was only $1,500. They pushed back, got another estimate, refiled, and ended up getting $10,000. It really shows the power of knowing the rules, knowing your rights, and being persistent. Don't just accept the first offer if it feels low. And one more thing about checks. Make sure any claims check for repairs to your property, if you own it outright, is made payable only to you, the premium payer. Don't let them make it payable jointly to you and some estimator or contractor unless that's specifically what you want. Keeping the check solely in your name gives you control over the funds and ensures the work gets done right before you pay the contractor fully.
That's fantastic advice. Control the funds, control the process. So just to kind of wrap up this deep dive, looking at all this material, it really drove home knowing your car's actual value.
Yeah.
Right? Not just guessing. And customizing those deductibles. What can you really afford out of pocket? understanding comp versus collision, being ready to grab evidence like a detective right after a crash, and then managing the claim strategically, whether it's injuries, rentals, or just getting a fair payout. All this knowledge is not just interesting, it's genuinely empowering. It helps you make those policies actually serve you.
Exactly. And if you connect that to the bigger picture, look, we're drowning in information these days, right? But the knowledge that really counts is the stuff you can actually understand and use. This deep dive into auto insurance with all these, detailed examples and practical tips, it's really designed to empower you, not just fill your head with facts. It's about being prepared, being assertive when you need to be in a system that can feel pretty confusing, honestly, making sure you get what you paid for when you need it most.
Absolutely. Makes you think, doesn't it? Given how much money flows into these insurance systems over a lifetime, what other maybe hidden benefits or overlooked strategies are just sitting there in our everyday finances, waiting for us to find them just by learning a bit more and asking the right questions? Something to ponder. Thank you for joining us on this deep dive.